Recording in progress.
Okay. Right. So I gave you question 2 for homework. Yes. Right. Now, firstly, how do we calculate the capital? Very good. Total assets. So because remember, we did the account equation last time. Yes. Account equation is what's the account equation, Tanisha? Assets minus liabilities is equal to owner's equity. Otherwise, you can say that assets equals liabilities plus owner's equity, right? So you can write the equation assets is equal to liabilities plus owner's equity. Yep. Right. So then here in this case, right, you have to get all the assets. What are the assets here? Right. Yes, we'll start from term deposit. Is it asset term deposit? Yes, 8,000 plus accounts receivable 2490. And then wages owing, what is it? Liability, current liability. Inventory, asset 50,000. Right. And then bank, asset. And then accounts payable, liability. I'll write in a different color, 1400. And then motor vehicle, no current asset, very good. And then the loan, liability, right? Just at this point, we'll take everything as liability, right? Plus 36,000, yes? Right. Then how much is your capital? Owner's equity or capital, same thing. Right. So owner's equity will be how much? You didn't do that? Yeah. Then what do you do? You know how to do it, yes? Yeah, so you will add all of them together. You subtract the liabilities. You'll get here 45, 190. Right? Okay. So if you wanted to add all the assets, then you can add. All the assets will be 90, 4 plus 7, 11, 3, 5, and then 8, 5, 30, 135, no, 155. Hold on, sorry, I made a mistake. One remaining, 9, 11, 1, 2, 13. One remaining, 5, yeah, 8, 3, 190, and then this is going to be 38,000. Right? Then you'll get owner's equity. Right? 45, 190. Okay. Then, right. How would we do the balance sheet? Part B. You are okay in balance sheet? Yeah. Did you do it? Very good. Can I show? Can I see? You had any problem? Yeah, owner's equity. So then you have put the owner's equity here, which is 41, 45, 190. I'll do it. All right.
Is capital the same as
Same thing. Owner's equity, same thing. Actually, little bit different, but at this point, you can consider it as the same thing. Right? Right.
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 So
So
current
current
assets,
assets,
it
it
will
will
be
be
firstly,
firstly,
we'll
we'll
go
go
through
through
one
one
by
by
one.
one.
Firstly,
Firstly,
term
term
deposit
deposit
matures
matures
25.
25.
Matures
Matures
in
in
25,
25,
so
so
is
is
it
it
a
a
current
current
or
or
non-current?
non-current?
Current,
Current,
very
very
good.
good.
Because
Because
why?
why?
We
We
are
are
in
in
31st
31st
January
January
now,
now,
25.
25.
So
So
it
it
is
is
going
going
to
to
mature
mature
in
in
25
25
itself.
itself.
So
So
then
then
it's
it's
going to
going to
be
be
current
current
asset,
asset,
but
but
I'll
I'll
write
write
somewhere
somewhere
here.
here.
Term
Term
deposit,
deposit,
right?
right?
8,000.
8,000.
Then
Then
accounts
accounts
receivable.
receivable,
I'll
I'll
write
write
here
here
accounts
accounts
receivable
receivable
2490.
2490.
Then
Then
wages
wages
owing
owing
here
here
600,
600.
and
And
then
then
inventory
inventory
50,000,
50,000.
right?
Right.
Next
Next
one,
one,
uh,
uh,
bank
bank
700,
700.
then
Then
accounts
accounts
payable,
payable,
current
current
liability
liability
1600,
1600.
sorry,
Sorry,
1400.
1400.
Then
Then
motor
motor
vehicle
vehicle
non
non
current
current
22,000,
22,000.
right?
Right.
And
And
then
then
yeah, we
yeah, we
have
have
only
only
one
one
motor
motor
vehicle.
vehicle.
So
So
if
if
you
you
want,
want,
you
you
can
can
record
record
it
it all the way in
the
the
last
last
column
column
as
as
well,
well.
right?
Right.
And
And
then
then
why
why
do
do
we
we
have a
have a
middle
middle
column,
column,
Tanisha,
Tanisha,
for
for
us to
us to
do
do
the
the
adjustments,
adjustments,
right?
right?
So
So
addition,
addition,
sometimes
sometimes
subtraction,
subtraction,
so
so
on.
on.
Now
Now
there's a
there's a
problem
problem
here.
here.
Loan
Loan
ANC,
ANC,
repayable
repayable
1,000
1000
per
per
month.
month.
Why
Why
do
do
they
they
say
say
1,000
1000
per
per
month
month
is
is
in
in
bracket?
bracket?
Installments,
Installments,
yes.
yes.
What
What
is
is
the
the
importance
importance
there
there
in the
in the
balance
balance
sheet?
sheet?
Is
Is
there
there
any
any
importance
importance
in
in
the
the
balance
balance
sheet?
sheet?
Yeah,
Yeah,
why
why
is
is that?
very
Very
good.
good.
You
You
are
are
smart.
smart.
You
You
can
can
split
split
into
into
current
current
and
and
non-current
non-current
loan,
loan,
ANC.
ANC.
So how
So how
much
much
would
would
be
be
current?
current?
1,000
1000
only.
only.
Okay,
Okay,
how
how
much
much
did
did
we
we
say?
say? For
How
how
long
long
did
did
we
we
say
say
for
for
the
the
current
current
liability?
liability?
12
12
months.
months.
So
So
that
that
means
means
so
so
1,000
1000
per
per
month
month
times
times
by
by
12.
12.
Why?
Why?
Because
Because
every
every
month
month
you're
you are
paying
paying
1,000.
1000.
For the
For the
next
next
12
12
months,
months,
you
you
are
are
going to
going to
pay
pay
12,000.
12,000.
Yes.
Yes.
So
So
it
it
will
will
be
be
12,000.
12,000.
Then
Then
you
you
can
can
underline
underline
that,
that,
which
which
we
we
are
are
getting
getting
14,000.
14,000.
And
And
then
then
how
how
much
much
would
would
be
be
the
the
non-current
non-current
part
part
for
for
the
the
loan
loan
ANC?
ANC?
The
The
remainder.
remainder.
Why?
Why?
Because
Because
12,000
12,000
was
was
current,
current,
then you
then you
take
take
away
away
this
this
12,000
12,000
from
from
36,000,
36,000,
it
it
will
will
be
be
24,000.
24,000.
24,000
24,000
is
is
the
the
non-current.
non-current.
Make
Make
sense?
sense?
Good.
Good.
And
And
then
then
on
on
the
a
security
security
already
already
calculated,
calculated,
Tanisha,
Tanisha,
that
that
is
is
45,
45,
190.
190.
Now
Now
let's
let's
see
see
if
if
you are
you are
going to
going to
get
get
it
it
balanced,
balanced,
right?
right?
So
So
my
my
bank
bank
is
is
coming
coming
to,
to,
sorry,
sorry,
current
current
assets
assets
coming
coming
to
to
190,
190,
11,
11,
61,
61,
190.
190.
Total
Total
assets
assets
I'm
I'm
getting
getting
83,
83,
190.
190.
And
And
then
then
total
total
equities
equities,
I'm
I'm
going
going
to
to
add
add
current
current
liability,
liability,
non-current,
non-current,
and the
and the
owner's
owner's
equity,
equity,
which
which
is
is
3.
3.
Yeah,
Yeah,
that's
that's
also
also at
83,
3,
190.
190.
So
So
it's
it's balancing
balanced
balancing
to
to a
83,
3, 190.
right.
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 Then
Then
part
part
C.
C. Referring to answer to part B, explain your treatment of inventory. What's our treatment for inventory? Yeah. Did we treat anything? Did we give any medical treatment? No, it's accounting treatment, yes. So what did we do with the accounting? I mean, the treatment for inventory? Current asset, very good. Why? Present economic resource controlled by the entity as a result of past event. Now, this is the answer. If you have missed anything, please adjust it. No. Right. Okay. Then the next question is, the motor vehicle is 3 years old, right? Right. And then the value is 15,200 rather than 22,000. Explain how the motor vehicle should be valued, referring to at least two characteristics, right? Two characteristics. You have done characteristics at school, Tanisha? No. All right. Actually, those ones we did in the class, right? You were not there. But however, because it's not coming to exam, don't worry. It's not coming, yes? No, then don't worry. Let's not worry about it at this point. Okay? Right. Then this one is done. How do you find? Easy, yes? It's done. No, it's easy, yes? Very straightforward, isn't it? Right. Then, next one. You happy to do the next question? I'll give you 5 minutes to do the balance sheet, Tanisha. Bank overdraft, current liability. I explained you bank overdraft last week, yes? Yes. Yeah, I remember I explained it. Yep.
What is it?
Credit term.
Yeah.
Sorry?
Credit or
Hold on. That's a mistake.
That should be okay.
That's wrong.
Tanisha,
Please make it accounts payable. Shouldn't be a creditor. It's actually the previous term, but we don't use anymore. Creditor is actually accounts payable. There is one time for stock as well. Tanisha, please change it to inventory. Yes, Tanisha?
mortgage.
Okay, now see the note. Did you see this one?
You know how long a quota is? 3 months. Yes. 3 months. That means how many quotas are there in a year? Four. Good. That means how much should be? Why have they given us again this note for us to? Yes. Why? We to pay when? Yeah, this year within 12 months. Yes. Good. That's right. Then the remainder will be. Remainder will be. non-current.
Yeah,
54,000 will be
non-current liability. Then, very good. Right. What was your capital, Tanisha? 146? You sure? No. No, not 146. I have got 96,300. You want me to check it? Yeah. So what is correct? Inventory. And also I saw in your SAC notification one, you are supposed to define accounts receivable, inventory, and accounts payable. You okay? Yeah. Yeah. You okay? Yes. Accounts receivable, I have given you the definition. Payable also, like especially in the questions, we have done. Yes. Then inventory. And then, please practice everything over. I mean, each and every point in the second application. Tanisha, make sure you practice before you go to exam. Okay, and I think it should be fine. Try to get more than 90.
Yeah.
You can. Okay, so sharing for 3 premises under Thomason. Yes, your assets are correct. Capital. Yeah, your calculation mistake. Bank overdraft, yes, 5,000. Okay, 6,000. And then GST payable less, correct. And then capital calculation mistake, right? So addition of all of them. Current liabilities, not current liabilities, right? These two plus owner's equity will be that.
Yeah.
Make this honestly.
Yeah.
Right? Yeah, this one. This is Tanisha because in the application you are to know this one. Counting entity assumption. So this one you are to know base rate of functionality.
Yeah.
And then there are some questions. This is everything for assumptions.
Yeah.
Characteristics also are given to you. So some answers are there. If there's anything missing, the missing ones I'll give you the solution for the things. Let's start with the number 2 answer, which is for characteristics. Yeah. Okay, so this is okay. How much did you get the capital?
96,000.
Very good, that's correct. Okay, right. Then part B. Do you know why the balance sheet is titled asset?
Yeah.
Why?
To show the businesses.
Assets and liabilities, basically we say the financial position as of a given point in time. Wonderful. So that means, Tanisha, we can prepare a balance sheet. Now what's the time? 1:46. If you want to prepare a balance sheet now for our business, yes, we can do it. If you want to prepare a balance sheet at 2 o'clock, 3 o'clock, anytime we can prepare. Actually, the difference between two balance sheets is only one transaction. With one transaction, the items will change. Then we can prepare a new one. Okay. Right. Then next one, take down if you want, part B. Yeah. Right. Part C, referring to answer to part A, explain your treatment for accounts receivable and bank overdraft. So then what would we say for, how would we write the answer for this one, Tanisha?
Accounts receivable should be treated
As a, or you can say has been treated as a
uh,
current asset. Why?
as
Present economic
control entity.
as event. So within brackets, you have to say what the past events are. Why would we have accounts receivable right now? Because very good, sold inventory to customers. Wonderful, perfect, right? On credit, close brackets, then that would provide economic benefits. What is the future economic benefit within bracket? Yes, very good. Cash at bank during the wonderful, perfect. If you can write like that, it should be fine. All right. So if you want, you can take it down for accounts receivable. But if you want, you can write it in your own words. Then you can check later the answer.
Can you send this to my work? Then I can write it when I come.
Yeah, sure. Otherwise, do you have phone?
Yeah.
Can you take a photo? Yeah, that will be easier, Tanisha. Yeah. Then you okay with the bank overdraft? Yeah. Yeah. So also the part D is also there. You can take everything if you want. Yeah. Right. Then next one. Now we are going to start the thing that actually we did, right? Whether it increases, decrease, or anything, right? All right. Firstly, right. Now I'll show you. Right. Now this is the twofold effect that your teacher had asked you, right? Teacher is asking the twofold effect. Then that is the one, right? Now you are good at the first thing, which is the first 5 dot points, equation, assets, difference between current, non-current assets and liabilities, then classifying items, current assets, non-current assets, etc. Accounts receivable, payable, and inventory, preparing the balance sheet, and also accounting entity assumption, which I gave you the note. It should be fine. Now we are going to start I think we should be able to discuss the financial indicators. That means you are covered. Good. Okay. Right. All right. So then, Tanisha, this one, a loan for, now see, have a look. State the effect on the accounting equation of each of the following transactions. Loan for 5,000 was received from ANC Bank. Now, with this one, do you think any item is affected? Yes, which liability? Current? Which current liability? What's the name of the liability? Loan. Loan from NC. Very good. Wonderful. Anything else affected apart from liability? Remember, Tanisha, the owner's equity will be affected only if the owner does something. Owner contributes its computer, car, or money. That's where the owner's equity will be affected, not here. Then what else is affected? So which asset? Wonderful. So you can, why? Because you get a loan means you get the money. Right. Then what do we do? So you can write item will be firstly cash at bank. Then it will be what is the classification? A for asset. Increase or decrease? Increase. How much? 5,000. Yes. Next one. The other item affected is loan ANC. It's a liability L. Increase or decrease? Liability. Yes, both the things are increasing. The amount is also the same, 5,000. Now, what's the twofold effect? That means each and every transaction affects at least two items in the accounting equation. Asset liability, it will be asset liability, maybe owner's equity. Two items will be affected. Okay. Right. Part B. Office furniture worth of 19,000 was purchased with cash. Right. So then what will happen? Tell me the items affected. Yeah, which asset? Which non-current asset? Very good. Office furniture. Asset A. Increase, decrease. Increase. 19,000. Right. Purchase with cash. What's the other item affected?
Cash deficit.
Very good. What happens? Wonderful. Cash at bank and asset decrease 19,000. I think you should be fine. Yeah. Okay, you want to try the rest or you need my help?
I'll try.
You try? Okay. Try with the pencil if you're not sure. Done? Okay. Please have a look at the answer, Tanisha.
Yeah.
Done? How many of them did you get correct?
All of them but one.
Except one. Which one?
Um, the capital D.
D. Okay. Now you know what to do. Good. So whenever the owner contributes something, um, Tanisha, remember, as I told you, owner's equity will increase because why? Owner's equity is or the capital is the claims on the assets of a business by its owner. More the owner contributes to the business, the more it can withdraw or claim. Also, there can be an opposite story. What is it? If the owner withdraws something from the business for its personal use, let's say business cash, business's inventory, business's computer or vehicle, owner takes for its personal use. What will happen? Asset will decrease. Owner's equity or capital also will decrease. Why? So when the owner withdraws something from the business for its personal use, what will happen? Its claims on the assets will decrease. Why? He can't claim that part again. Make sense? Yeah, that's right. So remember, owner contributes to the business, owner's equity or the capital increase. If the owner withdraws from the business, owner's equity decrease. Make sense? Right. Now, this one I have to show you now the how transactions are going to affect the business. Okay?
Yeah.
Now, firstly read the question. No? Right. Now, how do we deal with this one? What do you think the first step is for this one? Part A. They have already told us. What is it? Calculate the capital. Yeah. How much is the capital then? Did you calculate? Yeah, you want to calculate it? Correct. That's what I also calculated. 66,300. Good. Then we'll start from the first one. Now there is a method in doing this one. Okay. Right. Now this method I'll show you. Now see, in the first week of April, now see, 31st March 25, Pete's Emporium had these items as this. First week of April. Ah, now good, yeah. Yep. Then Tanisha, this one, have a look. Pay 3,000 to accounts payable. You know what I'm going to do? In the question itself, I'm going to update it. Now what will happen? Pay 3,000 to accounts payable. What will happen to your bank? Minus 3,000. I'll write here minus 3,000. Then accounts payable, that also minus 3,000. So both of them go down. Right? Next one. Borrow 28,000 from the NAB, which was used to purchase another van. Loan needs to be repaid in monthly installment of 1,000, commencing in May 25. Okay. Then what will happen is, right? Firstly, borrowed 28,000 from the NAB and it was used to purchase another van. That means what will happen? You borrow 28,000 and on this at the same time, right? So when you borrow money, your cash at bank will increase, right? At the same time, or the next moment, cash at bank will decrease. Why? Because you got the loan and then in return you pay it to the car sale. Right? So my money is gone. So that means net impact on money, zero. Right? You got money, 28,000 plus 28, take away 28, nothing. So that let's not touch bank. What happens to the van? A van is up or down? Yes, by 28,000. Yeah. Next one. Are you cold? 28,000. Right? Right. Were you born here, Tanisha? Yeah. Your parents are from India? Which part?
Which
Ah, really? Mhm. Gujarat. Your dad is doing business? Ah, really? What does he do?
he works in AGL
Ah,
contract.
subcontractor? Ah, good. He provides the connections. Ah, that's good. Okay. So, your mom works or your mom doesn't work?
She works.
Ah, okay. What does she do? Ah, okay. I have heard like India is. She works for government?
Yeah.
Okay. So, Tanisha, this one, 28,000, right? What happens is the loan is what is happening? Increasing. But there's a problem here. What is it? Loan to be repaid, monthly installment of 1,000, commencing in May. It is commencing in May. When are we now? April, first week. So in May. So that means probably we have to delay, like basically 1 month we are delaying. We are not going to pay it immediately. That means how much would be paid by the next 12 months? How many installments would be paid? Probably, do you think 12 or 11? 11, right? That's a tricky question. 11, why? Because they are going to start paying from May. So that means by the next 12 months, there will be only 11. So then current portion, I'll write here, the NAB loan, current liability is only 11,000. NAB loan, non-current liabilities, how much? The remainder, how much? 17,000. Do you have siblings?
Yeah.
Younger or elder? Okay. How many? Okay. Brother or a sister? Sister. How old? I mean, what year is she?
5.
RL, year 5. She goes to the same school?
No.
No. Okay. Okay, so this one, Danisha, the non-current liability will be 17,000. Okay, right, done. Now, another thing that you have to be careful here is, now see, in a way, our assets increase by 28. Our liabilities also increase by 28. Every time, then and there, at the end of each and every transaction, make sure accounting equation balances. Okay, did it happen before in the previous question? Yes. Every time make sure assets and liabilities, assets equals to liabilities plus 1 is equal. Same thing here. Okay, right. Then, yeah, if you want, we can, you can do this part as well. I think it should be fine. But I'm just helping you to do the part D. Okay. Now, Tanisha, if you want, we can do that part as well as we go. For example, April 1st, paid to accounts payable, then what would we do? We will say date is April 1st. What are the items affected? Cash at bank. Asset decrease. Why? Because we paid 3,000 to accounts payable. Then accounts payable, liability, that also decrease 3,000. Okay. Okay. Next one. Borrow 28,000. So then what we are going to say is April 2nd. When is an asset increase 28,000. And then the other one is loan, NAB, a liability that also increased by 28,000. Okay. Hmm. Right. Now third one. Received 2,400 from accounts receivable. That I think you are okay, yes? What happens to cash at bank, Tanisha? Then you'll put plus 2,400, right? And then accounts receivable will be minus 24. Then if you want, you can do it in the table, but the table you should be fine, right? Then number 4. Now see, this is an interesting one. Pete withdrew 1,500 worth of paint for his own purposes. Then what will happen? So this is this business is selling what? Paint, yes? So then which one would be affecting this 1,500? Where do you think this paint was included? Very good, wonderful. What happens to inventory? Minus 1,500, very good. Then what's the other one? 1,500. Where would it affect? Owner's equity will?
Decrease.
Wonderful. Now this one I'll help you, right? We call this one as whenever the owner withdraws something, if it doesn't matter cash or any other asset, we call them drawings, right? We will say 1,500. Drawings, actually it is drawings increase 1,500. Even though we say drawings increase, it has a negative impact on the owner's equity. So then I will give you like this, right? We'll go to the table. So table is going to be on the 4th, right? You'll say inventory, asset, decrease 1,500. Next item is drawings. Drawings, this is how you would write, minus OE, negative owner's equity. But drawings as an item is increasing. So even though it increases, its impact is negative, so that owner's equity will be negative, 1,500. But how this is how you would write. Okay, good. Then number 5 will be paid the wages owing. Then what will happen to the wages owing? Plus or minus? Minus. Why? You paid it. You paid wages owing. We owed wages to the staff, so we paid it. Minus, it goes down. It's like you had the loan to pay, you pay it, then it's gone. Yeah. Then the other item will be bank. Bank will be minus 2,000. Next one, last one, Tanisha. Pete contributed the owner his personal computer. Pete had paid 4,600 watt. On this date, its value was 4,000. So then which amount would be recorded? 4,600 or 4,000? 4,000, because he had paid it a while ago, but now it's valued at 4,000. So that is what is important for us. 4,000. Then what will happen? We will say like this. So computer, computer, we don't have it here. So I'll write computer here. Computer plus 4,000. What is it affecting, Tanisha? You will say, if you want, you can say capital contribution, right? Capital contribution, how much? 4,000. That's it. And also, sorry, how you are going to record it is, okay, number 5 also will write. Number 5, how do we write it? You'll write it as cash at bank. Cash at bank and asset decrease 2000. Then the other one is wages owing, a liability decrease 2000. Next one is number 6. It's going to be, what is it? Computer asset increase 4000. Next one will be capital owner's equity increase 4000. Okay. Now we are done with this one, Tanisha. So we'll start from the first one. Accounts receivable will be how much? 8,000 take away 2,400. 5,600. Okay, then you will go there in the balance sheet. Usually I will leave this one for bank, right? The first line. But this time the bank is going to be a bank overdraft. So that I'll write here accounts receivable straight away. 5,600. Right? Next one, bank. Bank will be how much? Bank is going to be negative 300. So bank overdraft 300. You know why? Because this is negative 5,000 and positive 4,700. So then negative is higher, meaning bank. So bank account becomes negative, means it's a liability. Okay, so then I'll write here bank overdraft. How much? 300. Right? The next one is, what is it? Delivery van, which is a non-current non-current asset. So how much is it? 50, 53,000. Yes, 28 plus 25. Then I'll write here van 53,000. Oh, is it delivery van? No. I'm sorry, you have to write delivery van. Exactly the same term. We can't change the terms. Delivery van. Okay. 53,000. Okay. Next one. Fixtures and fittings as it is 18,000. Right. Next one is inventory 22,500. So 24 take away 1,500. Inventory 2,500. Right. Right. Then there's another item, that is, what is it? Computer. New one, we wrote it there, 4,000. So computer, non-current asset, computer 4,000. Right. Then next one's accounts payable, how much? 6,000. Yes, correct. Accounts payable 6,000. Right. Next one is wages owing. 0. That means you don't have to write it. So why this 2,000 get cancelled with that one? You don't have to write anything. But we have NAB loan current liability, how much? 11,000. NAB loan, or you can say loan NAB, sorry, the other way. Loan NAB 11,000. Then there's a non-current liability of 17,000 NAB. Right? NAB. Sorry, loan NAB 17,000. I'll write on the last column because there are no more non-current liabilities. Right. Okay. Next one. Right. We have liabilities done. Now we have to do the capital. Remember, we calculated the capital earlier. Tanisha, 66,300. Yes. Then for that you are adding capital contribution. How much? 4,000. And you are taking away drawings. Drawings was how much? 1 year, 1,500. Good. Then I'm going to add all of them. I'm going to simplify all of them. I'm getting 68,800. Right. Then I'm going to add current assets 8,100. Non-current 5 75,000. 75,000 plus 8,100 is 83,100. Right. And then this is going to be now inventory. I have made a mistake. Inventory is not 2,500. Yes, 22,500. Sorry, inventory is 22,500, not 2,500. 22. Okay. So this one will be 28,100. So then addition of these two going to be 100. 103,100. And then current liabilities, I'm getting 300. 17,300. Then 100. 16, 23, 2. Yeah, 103, 100 balancing. That's it. You can try question 6 at home. That's the end of the tutor as well. Right. If you want to take down the answer for part B, that's the explain why the computer contributed must not be valued at 4,600. Refer to one assumption. Yeah, take down this one because your teacher wanted you to learn this. That's where we use the counting entity. simply what is accounting entities? Did I print you the other paper? Yeah. Take down. Simply what is accounting entity is Tanisha, it is like owner and business are two separate things. They are two separate phenomena, so that should be treated separate. That's what it means. Yes, but this is not whatsoever, because this is not coming to exam. Yeah, basically that's it, Tanisha. How do you find this one?
Yes.
Easy, yes? I'm pretty sure you can get good marks, try to get around 90%, if possible 100%. Only thing that we couldn't cover was the indicator one. So you can read that, what your teacher has given.
Yeah.
Read it, then you should be fine.
Yeah.
Yeah. Do you have by any chance the note that you showed me, the soft copy of that one? No. Just teacher give you the printed one. Okay. Okay, Tanisha, thank you.